Morning, James. Hope you're doing well. Where's our mothership headed? Let's dive in and have a look. Yesterday, we finally saw some kind of a pullback in the Dixie with this very sharp V-shaped dump downwards. So what we can see is that there's a change of character in the Dixie where we don't have the slow grinding up, but we have this nice V-shaped pullback. Is the order block finally doing the trick? Is this merely a deviation of our range? We're going to have to see. What we did see in the SPX is a vigorous defense of our critical support zone over here, and obviously a V-shaped recovery in the SPX. Let's continue tracking that and have a look. What I do want you to be aware of is that at 2:30 p.m. GMT plus 2 time, there is a further release of news data coming out, just to be aware of. At this point, I just want to pause and have a look to see why exactly is it that we had two big moves this week. It's usual in a non-confirmed bear market that we find ourselves in right now that we have one major move, as we've seen over the last few months. So what happened yesterday? Why did we have that major move? Essentially, what I want you to be aware of is that at the London Open, that's at 9 a.m. GMT plus 2 time today, there were $3 billion worth of options expiring. What happens is there are calls and puts, essentially bearish and bullish options within the market. And what happened at 9 a.m. Is that, well, before 9 a.m. today, is that the bullish side wanted to squeeze out. So I'm using terms similar to what we futures traders are familiar with. It's not exactly how it works, but just imagine that there was a short squeeze to the upside that took place. Let me just quickly show you. So there was a maximum pain point of around 26.5K that the bullish side wanted to squeeze and make sure that the options expiring today at 9 a.m. Here's your 26.5K. That the options expiring at 9 a.m. would in fact cause and inflict maximum damage to the bearish side. So 26.5K. You saw the slow march up, okay, and a final crescendo, and then this defense around here. And I'm going to actually break this down and show you. This over here is 9 a.m., where you see a final, actually this is 8:30, just before London Open. And you can see a major final push just to ensure the final nail in the coffin. I'm going to show you exactly how this all worked out in the heat maps. So that's something very interesting to be aware of. Let me just also bring this across and start showing you exactly how this move was manufactured. Right, let's have a look. This whole move started quite a while ago, where you can literally see these steps stepping the price up slowly and surely and holding it up. As I've shown you, what the market makers tend to do is to shape price and then push it in the direction that they want. And you can see this clearly unfolding in the heat maps. So here's this 26.5K zone. All right. What they did was throughout the course of yesterday, so it starts over here. That's from this point on, you can see them slowly marching the price up, slamming price up and making sure that it wouldn't come below this zone over here. That is essentially in a very, very quick style of explaining exactly what happened. Now, what we need to try to do is to figure out exactly what they are going to do next. So just never underestimate the greed of whales. I do not think that they are done quite yet. And let's just quickly flip. This is extremely interesting. Let's quickly flip to something that we usually use as a sentiment indicator. So This is the spot market. As you know, it's just been bleeding and bleeding and bleeding. However, we see a very distinct change in character where yesterday's move has got the spot market interested once more. We just continue seeing the upward trend in the perpetual markets, and that's fine, and that's what we track. But just be aware of this over here. So what I do believe is the market makers are not quite finished yet, and that we might be seeing a false move and a trap. And let's start unfolding this idea by just coming to our, let's show you here. This is our daily higher time frame chart. What we do see is our long-term downtrend line has had a breach. So yesterday it got penetrated, and today we are trading above it. All right. So we're going to continue tracking that. This is, I believe, going to start getting a lot of people interested once again, and a little bit of excitement starting to build. You can start seeing that our Bollinger Band is curving upwards like this, which does give us a little bit more room and juice to the upside. I want you to be aware of this zone over here, which I'm going to show you a little bit later. This Bollinger Band curving upwards gives us room to push up slightly up into this zone, and I'm going to show you that zone of interest a little bit later. Right, just bear that in mind. You do start seeing this supply coming in, these wicks that I showed you last time, the supply before we slam down again. However, like I say, I don't believe these market makers are quite done yet, and you can see that on the heat maps like I showed you. They are still stepping price up, and there's a reason for that. There's liquidity that I will show you in a while. There's liquidity that I think they want to grab in and around this area over here before their fake move to the upside and slam down once again. That is a possibility. Obviously, it doesn't have to play out exactly that way, but let's just start building this picture together. Right. So this whole range is starting to behave a little bit more usually like it should, instead of hanging around this zone over here with these weaker lower highs forming. So don't forget again that retail traders only look at one or two signs, and they get very excited to see, oh, hang on a second, if this is trading up here, we've made a higher high, and then they start getting exuberant and very interested in taking their longs once again and starting to long up into resistance. Don't forget, we haven't been able to penetrate and stay above this point of control over here, which was perfect resistance in the past. We also have, as I'll show you, a lot of liquidity in this region over here, which to me is a magnet to the market makers, getting a lot of people still interested in yet further a move before slamming price down again. Just never underestimate the treachery of the whales. Okay, so let's just go down to a 2-hour time frame and let's have a look to see exactly what has been happening. These support and resistance lines have been absolutely spectacular. They have just really been performing so well. As you know, we have been tracking this anchored VWAP, and have a look at what it's doing now. It's now acting as support. It has come into confluence with this channel top over here, and as you can see, perfect support. It's flipped it into support. Everything looking really, really decent. Where did we top out yesterday? Again, at our SR zone of 27.3K. Okay, so everything on track, everything looking good. Markets really fizzy and exuberant, and people excited once again. Beware. Okay, just beware. So I haven't drawn anything else. These zones of support and resistance have been absolutely spectacular so far. And um, that is why I'm not complicating matters. Let's just continue using what's working for now. Right. This is quite interesting. As you can see, we until today have not been able to penetrate this, and I'm pretty damn sure that a lot of retail traders have this downtrend line drawn, and they've been very, very happy to see, okay, we've come up and we are now back testing this. What I do believe is that they are going to therefore go long, and they're going to go long in the wrong areas. They're going to go long up here, as opposed to, once again, if you're not in a trade right now, pick the areas that you go long and short in. You should have been going long, if you're still not in a trade, around this area over here. Okay, that is below your value area low of this little range that is formed over here. That gives you a little bit of room to still ride up to the first take profit zone, and of course the next take profit zone up here. So just be careful. The point that I'm getting at is as follows. People are starting, they'll probably, as you know, there's some breakout traders out there, not mentioning any names, that have been wrecked over the past few days, and they're going to start doing the same thing. They're going to say, okay, we've got some exuberance up here. We've seen the breakout. Let's go long. And they're going to go long in this area here, which is, as you know, resistance. But I think there's a bigger move at play. So let's see. Let's unfold that move. What is this move? Let's just get this off the chart here. I'll show you now. Let's get some TA out. What I have shown you is that the market makers are slowly pushing price up. So yes, they might give us us, meaning the not us, but the retail traders who are not quite savvy. They might give us a little bit of a easy ride up for a little while before slamming price down. So just be wary of longs at this zone right now. What I do want to show you is the following. Going back in time, there's an order block, 2-hour order block that has been tapped. So just be aware of that. Has been tapped, and essentially there's only a little bit of the order still left up around here. But what gives me the confidence to still use this order block is the following. There is a buying imbalance right up at the top of this order block over here. So there's quite a bit of volume right up at the top, and the candle body is over there. So essentially that gives me a little bit of confidence to still keep that marked on the chart. All right. Furthermore, if you have a study of the liquidity, there is quite a bit of liquidity that's also there that has built up. So there's this old part of the order block here, plus further liquidity that's built up from the stops over here and over here. Okay, so that's a little block over there. Furthermore, you can see we have our SR line over here. So essentially, what I believe is the following. We might see a continuation up until in around this area, which I'd be interested in looking for shorts at this point in time to go down. Okay, so if you are lucky enough to get some entries in here and you see the order flow and market structure, low time frame market structure in your favor, then take your longs from here, but not around this part of the chart over here. Okay, you want to start looking for setups in that area over there. Now, you could also see some spikes down into this unrecovered 50% of this vector candle. So just beware. There are some much better entries for longs. You could see something like this, spike down, come back into this area, and then up into here, right? So if you're looking for longs, just wait for your entry. Right, then shorts. You want to start looking for your shorts in and around this area over here. Okay, that is essentially what I wanted to show you for today, trying to keep the video down to an easy, manageable weekend kind of length. And with that, I'm going to bid you adieu and a very, very good trading day and weekend. I will only be back online on Monday, so I might be a little bit late with the update because I have to do some TA and analysis first thing Monday morning. I usually like to prepare a little bit beforehand. So may the odds ever be in your favor. And please, please come and join our 10x challenge. It's doing pretty well. There is excitement. And the point is, I need 10 people. 10 people. We've got four so far. Come, get some people involved. How you do that is go to my Twitter account. There will be a link in the description. Go and follow me. Go and like the tweet, go and add some comments and tell me that you're interested, and we'll build this group and get it cracking. Thanks very much. Have a great week.